You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade, Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. Do you know what's going on in the world of vol? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging. Reminding you, if you're just listening to Vol Views, make sure you're subscribed to the full network. You're missing out on nearly a dozen other shows. And, of course, if you want to join the official after party for Vol Views, known as Options Oddities, you want to check out Pro Q&A's awesome one with some guy called Dr. VIX, unleashing a horde of early, unreleased, unusual activity research on us on Tuesday. You want to get all that good stuff, I should say, as well as live streams, giveaways, all sorts of early access and exclusive shows. TheOptionsInsider.com/pro is the place to go. As we go around the horn, see who's joining us for this Vol Views Friday. First, out to the dark, stormy, nay, tempestuous shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Not wearing his Maine uniform of flannel today, so I'm kind of confused, sir. But he is muting himself to start the show, so that does not confuse me.
I actually knew I was muted too, which is the worst part.
And yet you persisted in talking.
I just kept talking. I kept talking like somehow you'd be able to hear it through the headphones.
That's the Andrew we all know.
I guess this gives fodder for it provides employment for your sound editors. You know, of course, when
they've had many years of work because of you, and they thank you for it. They're like, oh, that guy again. God, I gotta cut out.
My God.
I gotta cut out 27 minutes.
It was a stormy day last night. Power got knocked out, but it is sunny and we are enjoying Indian summer. I think right now. Probably 70, 75 degrees and just beautiful after a torrential downpour last night.
Yeah, it was like 90 degrees last weekend in Chi-Town. This week it's 80-something degrees. So, yeah, a little bit of unseasonably warm weather as we keep on rolling out to Russell Avenue in Indianapolis, where we are joined, appropriately enough, by Mr. Russell Rhoads. Beaming in from Indiana University. Mr. Rhoads, welcome back to the show. How goes life on Russell Avenue, the street named after you?
Oh, pretty well. only person that can speak through the mute, and that's Mark Sebastian. I think he's the only one that even if he's muted, I think we would be able to hear him. But Andrew just doesn't project enough to get through the mute firewall. And I do think that the people that do work for you, if they're being paid hourly, they've been sending kickbacks for Andrew and me for years for not unmuting ourselves at the proper time.
There has been a lot of labor at my expense because of YouTube. But you know what? We keep soldiering on, right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's get down to business. A little bit of vol reviewing, of course, the portion of the show where we break down the week that was and indeed still is, some of vol trading and trending and analysis and all sorts of fun perspectives. And it seemed like after a week that's been actually a surprising color, mostly red, we had PCE on the docket this morning. Of course, the Fed's preferred gauge for inflation. You hear that bandied about all the time. And the number came in hot, but not hotter than expected, pretty much in line with expectations. Looks like we're hanging out at close to a 3% annual rate of inflation, which the target's 2%. I think we all know that's probably difficult to attain right now. The Fed gets that as well. So the market not seeing any signs that the Fed is going to pause their rate cuts. So mostly rallying. We started off the day kind of mixed, slightly red, but now as the show is kicking off, we are heading more firmly into the green, trying to erase some of that red that's been on the tape from this week. The NASDAQ, as we're kicking off the show, up about 1/3%, S&P up about 0.5%, and the Dow up about 0.75%. And our old pal VIX Cash, after hanging out north of the 16 handle right before showtime, right around 16.25, which would put it up about 0.5 point, is right back down to exactly where it was this time a week ago, 15.75, which puts it unched on the week. So listeners, if you weren't paying attention, if all you engage with the markets is vol views each week, nothing has happened on the vol front. We are literally unched on the week. Volley, our old pal, Mr. Scott Nations, who joined us on the show last week, his preferred at-the-money vol measure was at a 13.35 when we kicked off, or I should say right before we kicked off the show. Puts it up nearly a full point, about 0.85. As we're coming back into the show proper now, it's down to about a 12.70. That puts us up about 1/4 point or so on the week. And everybody's favorite, the stubbornly persistent VVIX, hanging out at a 98 right before we kicked off the show. That was unched, ticking down ever so slightly now, down to about a 96, which is down about 2 points from where it was this time last week. Markets getting a bit of a boost, vol getting a bit of a sell-off right as we're kicking off the show. Will this persist? Is this the way we're trading and trending for the rest of the day, or are we back in whipsaw territory? I suppose we shall find out as we go around the horn. Let's go the way we started. Let's go out to the dark and stormy lands. I am giving him plenty of warning, listeners, so he can find that big flashing. There it goes. It is now unmuted. There we go. Well done, sir. See, if I give you warning and say it directly, maybe you will remember to unmute. Mr. Rock Lobster, sir, an interesting week. A color we don't normally see in the major indices, a fair amount of red on the screen. Getting some green back today, getting some red in the vol space. So what's catching your eye, sir?
Well, I think the first one we had the PCE number, which, isn't that the Fed's favorite number for inflation?
That's the rumor.
It came in directly in line, which just goes to show you, if you fire the head of the BLS,
you can get any number you want.
Is going to produce.
You can get any number you want.
Not being political here. Not political. Everybody just calm your hackles. I find it. And then GDP, 3.8%. Who knew? I have a feeling part of the GDP number was the first quarter, everybody was, pooping their pants over tariffs. And then they said, oh, okay, maybe it's not all that bad. And then, there's a little bit of holdback and then everybody let fly. Another thing, AI spending, all this spending. I think a lot of investing in chips technology. I think big tech is spending some of their cash hoard instead of buying back stock, except for Apple, of course. All Apple does is buy back stock.
Apple might buy a piece of Intel. That's the rumor, at least, right?
Well, I think there is I think you got to be realistic at this point. Okay, China, a lot of Chinese friends, great country. However, maybe the government might have different ideas. Having some domestic chip production, some of these minerals that provide 95% of the capability of these technology products, you might want to produce some in the home country. Give it a whirl. So there has been a major shift in, I think before it was like, we're going to let those guys produce the dirty stuff over there and we're going to import it and somehow pretend that we're clean on that. Now, maybe it's more like maybe we should just produce it here, have the jobs ourselves, and try to do it in an environmentally friendly way, whatever that is. But I think these are major shifts. They're like, we could never have domestic production, but yet here we are. We could be mining. We could be making chips. We could be producing stuff. So another news item, PPTA. There might be a halt on antimony. Again, it's not that the minerals can't be found, these rare earths. They're not actually rare. There's a lot of them, but you got to pull them out. Got to process them. And China has, taken this business. So the U.S. is maybe looking to be at least for domestic production, a sure supply of domestic production. So these, I would say, are positive economic developments. Positive GDP, we had positive GDP growth, and the market sold off yesterday because that means, we're not going to get our rate cut. As you and I well remember, in the roaring 90s, interest rates were what, 5-6%? Didn't have any problem with the stock market making all-time highs, didn't stop anybody. So what it might stop is the government, because they have to borrow ridiculous amounts of money that we can't quite figure out what they're spending it on yet. So I think at this point, potential inflation, government spending is the sticky wicket. We have a potential shutdown next week, which is probably why VIX is not trading 1425 at this point. My guess is that if I had to predict, the Democrats or the opposition party, they will not give Trump the votes, create the shutdown, and then Trump will wait it out because as far as he's concerned, he'll just cut more jobs. So he will end up turning this into a victory because that's what he's been on a roll lately. Whether you like him or not, that's likely what he's going to do and likely what's going to happen. Unless the Republicans fold and give them the spending increase they want, which I think would be bad for stocks. And I think that's kind of where we find ourselves. But as of right now, the number coming in normal, we're starting to I think we have almost all the loss of yesterday regained, if I'm not mistaken. Yeah, we had that big candle yesterday. So yeah, so would it surprise me if even into this shutdown, the market rallied if they played hardball? I think if they played hardball, we will go to all-time highs once again. If the Republicans cave, though, I don't think that will be good for stocks. I don't think that will be good for interest rates or anybody. But we'll see what happens. And I think that's why VIX is still kind of hanging out here. Even though with VIX cash lower, the futures haven't moved a whole lot today. They moved a little, but not a whole lot. So I think that's the thing. It's, again, one more sit and wait for another 3 or 4 days until October 1st. And that's how it's playing out in Volland. But I know Russell will have an interesting take because that's why you have him on the show.
Russell, I heard a rumor. A little birdie told me that you have a very interesting take. What could that interesting take possibly be? That's what I've been told. I don't know.
Well, I agree with everything that Andrew just said. Let's move on to the next segment. I'm kidding. I've been watching the poly market on the potential government shutdown. It has rallied from like 50-50 to an 84% chance of a shutdown next week. And you would think, and I had not looked at the chart until right now. As Andrew was speaking, I was like, yeah, the shutdown in the back of my mind. You would think that when that number goes up, that you would think there would be a positive correlation between that number and VIX, and there ain't. So it seems like the equity markets are looking past a potential government shutdown. I didn't realize that it was a pending thing until we mentioned I'm down in Indiana. On the ride down, had Bloomberg Radio on, and if I took a shot for every time they had mentioned government shutdown, I would have gotten pulled over just barely into Indiana and would be doing time in the pokey for a DUI. And it's all they were talking about. Some of the press seems to be very focused upon that, and some doesn't. As far as the interest rate thing goes, I felt like about a week ago we were at a pretty solid. We're going to get a cut in October and a cut in December. And now it looks like, there's a 50-50 chance that we'll only get one cut between now and the end of the year, which I find kind of interesting, that those odds have come down a bit from being really solid, that we were going to get a cut at each of the meetings, including the one that we just got past. But and you would think that change would push volatility up. So a lot of things that as far as the broken record thing goes, I feel like every week I say something like, even though World War III is about to kick off, can you believe VIX is at whatever level? And maybe we should go along with something that I teach in class all the time, which is pay more attention to the market behavior than the news that's being told to you. And the market behavior is telling us everything's just quite all right, and we're going to win World War III.
Yeah, you look at this numbers right now, you're not outside of any other context, you wouldn't think we're on the precipice of potentially another government shutdown. You're right. Interesting.
No.
But I've always said that at the end of the day about VIX, right? At the end of the day, VIX is basic math. If the S&P isn't moving, VIX can't get there, which does raise an interesting question. And I'm going to give a preview of our question of the week for next week, because we've been kind of debating this this week on a bunch of other shows. I'll put it to you two as well. Kind of the point Russell just raised. People on the surface look at vol right now, and they don't follow the realized vol of the S&P. They don't do anything like that. They just feel in the ether that there perhaps should be a little bit more vol percolating in these markets right now. And they see VIX cash hanging out at a 15, can barely manage a 16 handle, maybe kiss a 17 very briefly before a run back down. Not really pricing in a heck of a lot of juice. Meanwhile, gold hitting new all-time highs almost every day, literally telling us, if you look at gold, hey, maybe the sky is falling. Maybe we should all be buying guns and bullets and shares in a silo somewhere in Montana. So two very different gauges of market sentiment right now, telling us two very different things, which raises my potential question of the week for next week. Which one is the better sentiment gauge for right now? Mr. Rhoads, which one are you buying? Is it gold, or are you buying VIX, sir?
Credit spreads. I'm guessing other.
No.
But
we will give another choice as well.
Well, but I mean, that's the one that I would be paying the most attention to. But gold over VIX, because I feel like the majority of the issues that the market should be focusing on are geopolitical and incorporate outside of the United States. And gold is an instrument that is accessible to everyone, whereas not everyone can trade VIX or trade S&P 500 options. And gold is just a natural magnet for folks when they're worried about what's going on in the world. So I would lean toward that one.
Mr. Rocklofter, same question for you. What is the better fair gauge / gauge of market sentiment right now? The VIX or gold, sir?
Wow, that's a good one. If I had to take the pick, I would say VIX is still a good gauge. I would say VIX is still the better gauge. I think gold is more of a move away from dollar-denominated stuff. Although we haven't replaced the dollar as the world's leading currency, I think there is a considerable amount of money going into gold from all of the global behemoths, all the BRICS countries, stuff like that. And I think gold will continue to rise until we see some sort of meaningful budget reform. That might not ever happen, and gold might continue to go up forever. I will comment, one thing is that the shutdown doesn't mean that we won't make interest payments. That is the debt ceiling fight, when they have that fight. This is just the government, not sending out checks and stuff like that, and not processing passports and all that kind of stuff. So Uncle Sam will still pay $1 trillion a year in interest to, well, I don't know, like what, 400 billion a year to the Chinese. Not a bad gig for them. But the shutdown will not totally cripple, will not cripple basically the financial system with non-payment of interest on the debt, which of course is what freaks everybody out. That is the yuck scenario where VIX goes so high and everybody's like, their 200 calls go in the money, except it won't matter because you will have nothing to spend it on because everybody will be broke and unhappy. So be careful what you wish for. But as of right now, I think VIX is still portending a move through this shutdown. And again, wouldn't surprise me if the move surprises everybody and it's going to be up. But that would be my guess at this point.
You know what? I'm not going to wait till next week. I'll have our producers put that live now. We'll have it run for all of next week, but it'll go live now just because we've been debating this a lot this week, and it seems like it's time to get some hard data from you folks. You folks are the ultimate arbiters at the end of the day. So lucky you folks listen on the podcast. A lot of you come in on the weekend. Vol Views is your weekend relaxation time out there. You can play along in this question of the week right now as well. It won't be expiring at the end of the day. So a little bit of extra fun for you on-demand listeners. As we go out to the land of the vol surface right now, listeners, what is catching our eye out there? And you know what? Once again, the reason why we can't really prep vol views too far ahead of time, right before showtime, we had things slightly firming up, markets in the red, vol firming up a little bit. We had the OCC future up about 1/4 point, no similar ballpark. As we're coming in to start the show, that is all gone, and now we have tilted to the red in these futures, if ever so slightly. The October future down about 0.15 or so right now, and the no future kind of unched to off about 0.05. But all of that juice that was percolating in that front portion of the curve is mostly gone. I'm sure if I reacted again right this second, might even be lower out there, listeners. If we go a little bit farther out, we've been talking about this for a while, that, that chasm between October and November is still there. We're at roughly a 1780 on the OCC future at the start of this segment right now, and then the no future hanging out at a 1936. So a decent gulf between those two. Then it's kind of more of a gentle drift up by the time we get to, let's go all the way out to the middle of next year. Why not? Let's go out to June. June of 2026 sounds like an eternity from now. I can't fathom what vol will be then, but the market is telling us it will be 2170 next year. So interesting stuff out there. Mr. Rhoads, we shall start with you, sir. What is catching your eye on the vol surface for this week, sir?
Well, yeah, you left one for me, and I appreciate it. I'm going to use your word chasm. There's a big chasm between October and spot. Now, the October settlement is not until the 22nd. It's a little bit, it's later, there's a range of days that VIX settlement can fall in. So even though, we're going to see October next week, there's still 3.5 weeks to go on those futures, but that's a pretty wide. The spread is more than 2 points. It's about $2.15 right now. I think that is a function of something that Goldman Sachs highlighted earlier this week, which is the realized volatility in October is almost is on average. It's on average, it's around 18. The realized volatility for the S&P 500 in just about every month of the year is 15 or 16. So we all think October is a much more volatile month. Goldman Sachs tells us it is, so that must make it true. And I think that's why you're seeing, such a large spread. between October and spot and November and spot, just by default. If November's way above October and October's way above the spot, that's where you're at. But we've also got, and this is the one that just perplexes the heck out of me, December is at a 50-cent premium to November. And December usually is kind of in line with November. So, and we have talked about that, and I can't remember the exact events, but there are some events, some significant events before the December meeting this year, or before the December expiration this year, and I think there's a Fed meeting right before it, and that's what is keeping December elevated.
Yeah, I think we discussed that before. There's some kerfuffle between picking the new Fed chair in their last meeting sometime right around that time frame. And you know why there's more juice in October, Russell? Not just because Goldman tells us, but because you can't call it Rockvember. You can only call it Rocktober. So therefore, you have to price VIX accordingly. Rockvember doesn't even make sense. People would laugh at you. Rocktober, perfect sense. By your silence, I'm taking that you agree.
Well, I didn't know if that. See, now you didn't give us a warning as to if you were handing it off to him or not. So we both we're the two worst people in the world to leave that uncertainty out there with, Mark. You know what I mean? Really? I mean, come on now. You can't do something like that.
The professional comedian, I was pausing for applause, and I got none. So instead, that's my own fault. I should never expect quality responses from you two on the applause front. So instead, I will toss it to the Rock Lobster. What are his thoughts? What are his thoughts on the vol surface? Remember, sir, we all learned last week we're talking about the VIX futures term structure, not the SPX vol surface, lest you be confused, sir.
Oh yeah, did somebody do that? Oh, was that the Nations guy? Did he went into the Voldex land or something?
No, I think that was you on the show last week, actually.
Oh, was it? I actually did the wrong thing. You'd think after a while I'd understand a little bit about this volatility stuff, but we have I would say a contango curve with a historically fairish amount of downward slope. It's not a ton. However, normally past, when VIX is like kind of in 16, you tend to see like a flatter curve. And this would be a good statistical thing for Russell, but I would swear we have had more steep contango curves with VIX 16 and higher since 2020 than we had prior to. And I don't know. I think that's just observation, because most of my VIX stuff that I look at is just observation to kind of come up with values and things. But I would almost swear that, like, I don't really remember 16, 17, 18 VIX and such high levels of like steep curves with VIX that high. I think part of the problem is, like, where realized vol is nothing. It's like 8%, 7%, 10-day volatility is just nothing. So contango, you should have contango when you have very low realized vol. My biggest question is, like, who's paying up for all those options out there? So it's more of people are buying options, but waiting for something to happen. And I think it could be, I think people misunderstand the shutdown. I think they think that government's going to stop paying interest payments. It doesn't work like that. So at least from my point of view, I think this should be a great VIX put buying opportunity. The 17 puts are like $1.05. So not very much. Like, it would be different if the market was moving all over the place, but just goes up. So I think it is a favorable curve for buying VIX puts. They're very inexpensive. And, I love them when they're like dollars and less than dollars, and they're like right at the money. Especially when we have this shutdown thing. I guess everybody's trying to handicap how long it goes on. My guess is if it's up to the President Trump, he will wait them out. He will not care. If he has shown any ability to do things like that, waiting will not be a problem from him in this case. So But I think there's a fair bid for vol just on the fact that people are worried about the government not paying their obligations and stuff, which is not the case right now. We'll see how it all shakes out. But again, we've had very low realized vol and relatively high volatility now pretty much the whole summer. And the market just continues to rally. So I don't know, is this the most hated rally ever? As I recall, the .com rally, like everybody liked it. Pets.com went to $500.
It was nowhere near as hated as this one, as I recall.
Yeah, we reached a new handle. Everybody's like, yeah, we're going higher.
Yeah.
I think the Q is up like, in 1999, I think the Qs were up like 90%. Cash index up 90%.
Good times. What does it do? Who cares? It's .com. Those were good days.
6,500, 6,600. Everybody's like, we're crashing. We're going to hell. Well, okay.
I actually think the most hated rally was 2009 because everybody because we all missed it. You were every weekend. You'd about 5 o'clock Chicago time. You take a look at what's going on with the S&P futures, expecting a repeat of what happened Lehman Brothers weekend, and we just never had the other shoe drop. And I think a lot of people, if anybody tells you they bought the lows in 2009, they're full of it.
Yep. That's why
everybody hated, and that's why everybody hated that rally because they missed it. So. There you go.
What people are hating right now is VIX. Our poll just went live. 80% of respondents are saying gold is a better gauge of market sentiment right now. Only 20% for VIX. Again, this just went live. This has a full week to go. So the early blush is not necessarily the way it's going to shake out. But interesting stuff out there. Gold making some headlines as we keep on rolling out to the land of VIX options. Maybe this is one of the reasons why VIX is not getting any love in our poll right now. Because it ain't getting any love in the market right now. These last few sessions, including today, you kind of want to shake the machine to make sure it's on. Is VIX on? Is VIX awake? I mean, I was saying just a week and change ago, when the ADV gets north of 900K, I start to get skeptical. I start to get dubious. My eyebrows raise because threatening 1 million contracts a day in VIX land usually takes a lot to sustain that, and usually it's not sustainable for very long. I think we got up to somewhere around 950 in the madness in and around the Fed, and ever since then, it's been kind of coming straight down. Exhibit A today, as we're coming through halfway through the show now, listeners, only 125,000 contracts have gone up in VIX in total, in the entire VIX complex. There are days when we see more than that in one leg of a spread, listeners. So 125 total in VIX today. So yeah, that ADV is coming plummeting back to earth real quick. It's at 824 right now. That's down 124,000 contracts a day from this time last week. And after the way this week's shaping up, it's going to be back to 700K pretty soon. I would say around 650 to 750 is a pretty sustainable range for VIX. Beyond that, again, it takes a lot going on in the rest of the world, which we're just not in the market, which we're just not seeing right now. So 125 on the tape. So spoiler alert, don't expect bangers on the volume breakdowns for this week, listeners, especially today. But let's do a real quick rundown on the top 10 in VIX land. What is open for size in VIX land in this new plummeting downward ADV regime that we are in? Well, we are still hanging out 7-3. So if you thought maybe some puts would be making it in or maybe some more calls, nope, we're still hanging out 7-3 calls over puts in the top 10. Once again, a put kicking us off, 175,000 of the no 15 puts. I should go back and we should do a little study. Maybe Russell can put one of his interns on this. Just more for our own edification and or schadenfreude. But how much money, how much premium went to die on that 15 put strike in VIX this year? Spoiler alert, it's a lot. People have been tilting at that 15 windmill just forever. And most of it has not paid off. Maybe you had a few brief periods where we were dipping and maybe you had a chance to at least scratch those puts, maybe get them out for a little bit of a winner, but those moments are few and far between. Doesn't stop people from piling in to the 15 strike. Number 10, $1.75 of the Nove 15 puts. If past is prologue, folks are mostly buying these, so we shall see. Number 9, $1.82 of the Nove 25, so going the other way. Number 8, back to Putland, 186,000 of the OC 18 puts. I heard what the Rock Lobster was saying about the 17 puts being $1.05. And on the surface, that sounds cheap, but also in this environment, I am loath to shell out $1 or more for any put. It just seems like that money can go to die real quick. Number 7, $1.93 of the OC 60. So we're right back to the fun. Number 6, our third and final put of the day, 228,000 of the OC 15 puts again. 15 put strike. So much money has gone to die there this year so far, listeners. Maybe the Nove or Ox will be the huckleberries that pay off and prove to be the exception to the rule. Not with what we're seeing right now with that chasm between the cash and the futures. Something's got to give there, listeners. Number 5, 233 of the OC 25s. Number 4, 240,000 of the Nove 47 halves. If that's too far out for you, allow me to present number 3, $250,000 of the Nove 47 halves. I don't think those have changed the contract since last. I think they were 252 last week as well. Number 2, 274,000 of the OC 35s. And the big dog in VIX land right now. Can you guess what it is? Drum roll, please. I'll give you a couple seconds. See if you can take a guess. Is it a put? Is it a call? If so, is it a reasonable one or a complete nutso bonkers one? If you guessed the latter, you are correct. 284,000 of the D60s, because why wouldn't it be, listeners? All right. I set the table for him. I set a very low bar today. Not a lot going on in VIX land. Let's see if Russell can meet that as we head on into Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, I have set the bar of 125,000 contracts today, which is not much. Can you possibly exceed
much
that
at all.
low bar?
It was a fairly quiet week and kind of an interesting week. Didn't see some of the activity that we, just the kind of activity that we've been kind of used to. In fact, I think Andrew said earlier that he wasn't seeing a lot of put buyers, and I don't really have one of those. I got a couple of them, but nothing for this week, or nothing for this week's expiration on Monday or Tuesday. So on Monday, just a whole lot of sellers of the September 24th, 16, 17, and 20 calls. And I honestly believe that people were just salvaging what they could from calls that they owned going into the Fed last week. I really, because they all look like exit trades. They all were about half of what the open interest was, et cetera. So I just really feel like that's what was going on there. On Tuesday, and there really was no good entry trades that day. Nobody buying September 26 puts that looked like it made sense. On Tuesday with VIX at 1679, somebody bought 2,000 of the VIX October 1st, 16 puts for 17 cents. And then somebody also with VIX at 1639, somebody sold 750 of the October 1st 15 calls for 264 and bought the 18 calls for 81 cents. They took in a credit of $1.83, which they get to keep if the October 1st settlement's below 15. The max potential loss here is $1.17. So I often say things like, I would have done this differently. And so I actually looked at how I would have done this differently. And I think if you're thinking about doing this trade, at the same time, you could have bought the October 1st 18 put for $1.35. So your max loss would have been $1.35 if we're above 18. And you, which is 18-cent difference than that bear call spread that I just talked about. But if VIX overshoots 15, you can still benefit from it. So given the you like to do survey, you like to do the little survey things between doing the 15, 18 bear call spread or just buying that put, I would have bought the put. I just feel like that, give yourself a little bit more wiggle room to the downside. On Wednesday, kind of an unusual trade, and this is why I know that October settlement is on the 22nd. Somebody with VIX at 1680, somebody bought 4,500 of the October 15th 21 puts. they paid $3.80 for them. The break even on that guy is $17.20, so they already had 40 cents in it. Looking really good right now. If I were them, if I could get out of it at about $5 or so with VIX a point lower, I might actually consider just taking profits and not waiting until October 15th. On Thursday, with VIX in the 1720 to 1740 range, we had a buyer of 1,400 of the VIX October 1st, 17 puts at prices between 32 cents and 38 cents. When I saw that trade, and I saw, compiling this a little bit earlier today, and VIX in the mid 16s, I was like, boy, is that a bad trade. Boy, is that a good trade now, huh? Like you say, things always change when we're on this program. And then today, a trade that, again, with VIX at a little bit higher levels, because this was fairly early this morning, somebody bought 700 of the October 1st 18 calls and sold same number of the 19 calls, and they did that at a cost of 21 cents. If they can get VIX up above 19 for settlement next week, they can definitely, they have a nice profit of 79 cents. But not a whole ton going on in the weeklies, much like everything else. We finally got that rate cut behind us, and now everybody's regrouping to figure out how they want to approach the last part of the year.
The meaty puts in VIX doesn't never really resonate. Like nearly $4 for those puts.
Yeah,
I mean he was wearing it until today.
Well, yeah, I don't mind those that much because as you get a little bit deeper in the money, and in fact, I bought but just before the program started, doing the trade that I try to do, shorting into expiration if it makes sense. I bought the 20 puts for $3.35 when VIX was right at 16. So I already had a 65-cent buffer in there. And that buffer widens as you start to go a bit farther up with the strikes. I know that the cost of the puts is a little disconcerting, but you have more negative time value, as I like to put it, as you start to go up the strikes on the puts. So I don't have a real problem with that, with paying $3.80 for that, because I practically did the same trade.
I get it theoretically. I'm just saying, in this environment right now where any single tweet could erase all of that in a heartbeat, I am less committal to the $4 and above puts than I would be in a normal market environment.
You're definitely, you said earlier, something's got to break between spot VIX and the VIX future. In this case, you believe that the future is going to break lower.
Yeah, you'd have to.
That's the only way to put that. So that's the side they're on.
My fortune, I would buy that $4 put and it'd be looking great, and I'd be going to take it off, and then here comes the tweet. And now those puts are, add a nickel. Yeah, exactly. Add a nickel, all you can get. So in this environment, I've kind of set a cap on how much I'm willing to roll the bones on really in any VIX direction, but definitely to the downside these days. Witness all that 15 put juice that has gone the way of the dodo, listeners. Not that I've lined up on. I've said all year I thought 15 strike was maybe a bit of a bridge too far. So far, at least, that has proved prophetic. We'll see if that will continue. You know what won't continue is a lot of volume today. There's nothing on the tape today. Again, 125,000 contracts on the tape. So unless you're really excited about 8,700 of the Nove 80s, it's a special day in VIX land, listeners, when the Nove 80s, 8-0s for an average price of 17 cents, 8,700 times is your number one trade out in VIX land. So you know what? We're going to dispense with today. There is not much of any real value going up out there today. Yesterday, not a heck of a lot more, listeners. Again, if you looked at just these numbers, apropos of nothing else, you would think, okay, it's in the heat of the dog days of summer, or maybe it's the week leading into Christmas, or times when it is seasonally nothing going on in the vol space. Not end of September heading into Rocktober, dare I say it, potential government shutdown on the horizon, all sorts of geopolitical fun going on. And yeah, VIX can't even be bothered to get out of bed. 363 on a day when the ADV is north of 800, somewhere around 850. So wild stuff. For the hot option, such as it was 20,000 of the Nove 16 puts. And these did catch our eye, going up for about 47 cents. They were an intriguing one. In fact, so intriguing to us yesterday during the option block that we did put out a flash poll on these because we love to gauge your sentiment on these. 16 puts, not quite the 15 strike. So obviously you're getting a little bit more wiggle room there on the strike selection. Obviously getting a lot more duration than October. So a lot of things working in your favor. The juice, you could argue if it's too much or not, but it's certainly not $4. So you think you could survive that 47-cent body blow if it does go your way. Or maybe you're saying, you know what, that's a screaming sale. So we put it out to you folks. You want to buy them, you want to sell them for 47 cents, or would you rather buy them or sell them as part of a spread? We like to give you the risk mitigated versions whenever possible as well. And 65% of you want to buy them. You think that's a screaming do. Only 25% of you are saying sold to you. And then 5% roughly each want to buy them as part of a spread and sell them as part of a spread. So interesting stuff. Nove 16 puts for 47 cents. Really the only interesting trade going up yesterday, unless you were super psyched about 18,000 of the OCC 20 halves going up for about $1.41. Those were opening. Worth noting, there is size OI on the Nove 16 put. So this could be somebody closing an existing position, but we just thought it was interesting, caught our eye, wanted to put it out to you folks. And you folks clearly want to buy them. Wednesday, not much more paper on the tape, 443. We are growing, though, as we go backwards in the week. The hot option on a not really active Wednesday, 20,000 is 20,000 has kind of been our barometer this week, which again shows you what a crappy week it is. 20,000 of the OCC 23s, average price of exactly $1. Those were closing. Someone said, I'm taking my dollar and getting the heck out of Dodge with those bad boys, listeners. Or they're short them, say, I'm buying them back for $1 because I am scared that to death. Either way, closing for $1. Number two, 18,000 of the 15 half puts. Average price for those, 28 cents. So maybe 15 half is your sweet spot. You don't like 15, maybe you like 15 half. Number three, 15,000, almost 16,000 of the OCC 40s. Number four, about 16,000 as well of the OCC 18 puts. And number five, 15,000 of the Nove 32s. Tuesday, even more paper, if you can believe it, 562. So we are continuing to grow as we go backwards in the week. Number one, again, a weird week, 32,000 of the Feb 70s, 7-0s. We were just talking about the 60s not too long ago. Now the 70s are coming to play. Surprise, surprise, that was opening. No OI on the 70s in February. So yeah, 70s, if you're wondering what's a 70 going for in Feb right now, 50 cents was the going rate for those bad boys. So interesting. If you like to do the old far out of the money, quote unquote, covered call in VIX, not really covered. Maybe you would say sold to you. Put that 50 cents in your back pocket for a rainy day. Number two, 27,000 of the Nove 26s, 76 cents for those bad boys. Number three, 27,000 as well of the, I said Nove, I meant OCC 26s. Number three, 27,000 of the OCC 21s. Number four, 20K of the OCC 16 puts. And number five, about 17,000 of the Nove 16 puts. And then Monday, we're going back down the wrong way, 425 on the tape. So we could barely one day muster 500,000 contracts this week, and that was it. And today does not look like it is going anywhere near 500,000 contracts. 425 on the tape for VIX on Monday. The hot option, 42,000 of the Nove 50s. Number two, 42,000 as well of the Nove 25. So obviously some vertical action. Looks like it could have been closing on both strikes. There is size OI on both. So I'll have to go look and tell to see what go dig a little bit to see what was going on there. But Nove 25, 50 vertical. Looks like price is nearly $1. As we keep on rolling to the number three, about 20,000 of the Nove 30s. Number four, 15,000 of the Nove 19 halves. And number five, 15,000 as well of the 19 half puts. So looks like we got a little bit of conversion reversal / straddle fun. All right, Mr. Rock Lobster, I shall start with you. Kind of a light day. Not a lot, or light week really. Not a lot lighting it up out there. What are your thoughts on these Nove 16 puts for 47 cents? Did you like them, or would you say sold to you? And what, if anything else, is catching your eye in the VIX landscape this week, sir?
Well, in general, I like puts that are like in the money to intrinsic value to VIX for little tiny prices. I always have, because it doesn't take very much for those to actually double in value. So I would not be a seller of those, although you probably get a chance to buy them back for less at some point. But I think there's good leverage in those kind of puts, to be quite honest. And after November, we've got, let's see, what's our Fed shenanigans going on here? I was looking. Whoops, I lost my page. Yep, we got Fed shenanigans on October 28th and 29th and November 10th. So you notice how they always try to put their meetings after VIX expiration or on VIX expiration. You think they could actually ever put them before VIX expiration just so we could get some closure on their madness? No. I swear it's a conspiracy now just to mess with me. So, in the old days, nobody cared. Nobody cared what was going on with the Fed. But now, since they've decided to run a massive balance sheet and do all this other kind of stuff, we got to watch them. So yeah, I don't think the Nove. I think you'd probably make money buying the Nove 16s, but again, I've never been a huge favor of selling VIX puts, but especially when you're in contango and they're kind of in the money, because I always figure you could sell them for a better price later as vol melts. So, but anyway, yeah, that's kind of where I am on that one.
Not making a ton of money on those Nove 16 puts right now. They're still 47 cents at 50. So if you wanted them, you thought you missed them, you can get them for 50 cents right now. All you want there. So there you go. Keep tilting to that windmill. We're already coming up against it. Hard to believe this vol journey is just flying by this week. So let's run through the rest of the vol landscape here. SVIX 2090 down a half a point. I think it has ticked up since then, north of about 21 and a quarter right now. So it has ticked back up as VIX has started to come back down. So 21 and a quarter, that puts it close to unched on the week, maybe down slightly out there. Nearly 5,000 contracts on the tape. The ADV is 5,000. That is unched on the week. UVIX 1015 up about 0.15, putting up about 27,000 contracts right now. The ADV is 38,000, down about 2,000 on the week. UVXY 1060, it was unched. 80,000 contracts on the tape today. The ADV is 98,000, down about 4,000 from last week. And VXX 3340, up about 0.2 of a point, putting up 30,000 contracts today. The ADV 43,000, down about 2,000. Mr. Rhoads, anything catching your eye in the world of vol ETPs this week, sir? Oh no, he is muted as well. Our editors.
No, it's down signal for a second. That was the phone's fault, not me. What I was going to say is that I've started watching the flows on the short and the long volatility funds, and we net experienced slightly negative flows for the short VIX ETPs, and you would think now that we're in a normal curve, etc., that this is the kind of environment that people would be gravitating into those funds. So I'm kind of surprised that we've net seen a slight outflow cumulatively across all of the short VIX funds this week. That doesn't include, I haven't seen data for today, but just a bit surprised at that. You would think that money would start flowing in those once we get a big piece of uncertainty behind us.
Mr. Rock Lobster, same question for you. Anything catching your eye in the vol ETP landscape this week, sir?
Mostly how much they're not moving. Why don't you just throw a dart on VXX at 34 and say, stay dog, stay. VXX, UV, I mean, they are, I mean, VXX, okay, I'm going to say down today. So that's a little bit of one, but for the most part, we have seen very little action on those. They have been range bound to 80. What's hard to believe, you have a 16, 17, almost 18 VIX, and then those things don't go anywhere. So there has been a lot of, there's been some movement for the cash VIX, but not a whole lot for the future. So generally that means, you're not going to get a lot of action. You can't get those things whipping around. There is no real activity in the future. If there's no real activity in the future, those buyers, those vol buyers are just not out there. At least at this level, I feel like they're pre-bought. They're pre-bought,
All right, listeners, now it's time to keep on rolling into our final segment. It is time to go around the block.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, welcome to the Crystal Ball. I got so excited from the Rock Lobster that I pulled a Rock Lobster. I said the wrong show. Of course, not Around the Block, but the Crystal Ball. As we're coming into the end of the show, listeners, VIX Cash flirting with the 15 3/4, a 15.73 to be precise out here right now. And I was at a 16.73, so I was feeling it, just a point in the wrong direction. Andrew was on the show last week. He's at a 17.01, so no joy for him. And we had Scott Nations last week, pulling at a 16 1/4, so a little over half a point away for him. He also guessed Volley, and Volley is at a 12 3/4, so he's looking a little better on Volley. He's only about a quarter of a point away there, but not within our margin of victory. So I guess technically I'm the closest. So you know what? I will go first for this time next week. I will set the bar that all others must follow. And, you know, we do have the potential shutdown next week. So this time next Friday, that could be, oh, we're laughing about that. That's in the rearview mirror. Or it could be, oh, we're in day whatever of the shutdown. So that could be a little bit interesting. So given that spice and the fact that we're debating the gold versus VIX right now, I'm going to say, you know, I kind of don't hate where I never do this. I'm going to say my same thing as last week, 16.73. I don't hate that level again. All right. I'll let whoever wants to go next. I will be a fair person.
I got to go because I got to go. So I'm going to say, 1490. What was Christopher Columbus? 1492.
Yeah.
You're like a kid in school now. They don't learn that. You don't know that number anymore.
Yeah, I know. Like, yeah, he didn't sail across the whatever. People are crazy.
And where should folks go?
And if you want to learn more about volatility, you could go to school and take a class from Russell, or you could pay us big dough and come to Option Pit, and you can learn all you want to learn.
There you go. And if you pay extra,
Trade 01.
If you pay extra, Andrew will flash you in the dark alley of your choosing.
Yes, 5 or 10 times.
Oh, 10 times. That's the bonus package.
10 flash 5.
Ooh, the bonus package. I'm on full 10 flashes now. Awesome. Check it out, listeners. Get all 10 flashes. OptionPit.com, the place to go to learn more. Mr. Rhoads, what are you feeling for this time next week?
Well, I am tired of losing. I wrote a quantitative model this past week to predict VIX based on a bunch of factors. So the model says 1596. I am going to start always using a model. I'm taking it seriously. I'm tired of being beat.
Then you just blame the model, and then you're good.
That's right. It's not my fault. It's the damn model.
She said 1596?
1590. Actually, it's 1596. It's 15.9643.
Oh, well, we don't get to...
It's a model.
We don't get to all those decimal points.
And I really wanted Andrew to stick around because I figured he would just lose his mind over that.
You should have led with that, yes.
Creating a model.
You should have led with all the decimal points. That would have been good, yes. Yeah. We'll have a new contest. Who can get to the 1,000th within VIX?
Yeah, but so that's it. 1596 is my. I wrote a quantitative model that predicts where VIX will be 5 days in advance based on where it is right now, and lo and behold, that's what it's telling me based on 1573. And it's super secret, and I will never share it.
Oh. He's going to tell me what it is right after the show. Listen, I look forward to.
Yeah, I am going to tell you what it is.
Once the mics are off, he's going to tell me all of his secrets. Speaking of secrets, right now, listeners, you folks are getting even more heavily into gold. 87.5% of you now saying gold is the better indicator of market sentiment right now versus VIX. Only a paltry 12.5% going for the fear gauge. Get over there at Options, make your voice heard. If you're listening after the fact on the podcast, you too can play along. At Options is the place to go. While you're listening, make sure you send in your prognostications for VIX for next week. We got, the woman who beat me in fantasy football last week, Cursor, the queen, coming in at 1630. We got a lot of 16 handles, 1663s, 16 even, a lot of 16s in our chat. So are you feeling a 16, listeners? If you get your prognostication in, if you're within our margin of victory, you too can win fabulous prizes. Speaking of the live chat and all the good stuff with the pro, if you're in the pro right now, hang out. I'll be back in a couple of minutes to hold court on all things oddities. A lot of weird stuff popping off. Should be fun times. If you have some trades or names you want to talk about, make sure you get them in there as well. We can discuss it. If you want to join the fun, theoptionsinsider.com/pro is the only way to get in on the official after party of Vol Views, known as Options Oddities. Also gets you to a little bit of fun fantasy football these days as well. Just an added bonus. I see people talking smack. I see the guy I'm playing. He got some points already. So I got some work to do this week, listeners. Check it out, theoptionsinsider.com/pro. Of course, while you're checking things out, make sure you check out our friends over there at Tasty, tastytrade.com/podcasts if you want to learn more. See what offers they have for you fine Vol Views listeners. Hey, if you're a broker, who doesn't want the Vol Views audience coming to their platform? You're literally the best audience in the game. You get Vol, you're savvy, you've got some capital, all the things a broker wants. tastytrade.com/podcast, the place to go to learn more. Mr. Rhoads, if they want to learn more about all of the goodies you got cooking, where should they go? What should they do?
Sure. Follow me on Twitter. It's my full name, Russell Rhoads. You know that. You were very gracious in allowing me to talk a bit about that paper that I put out earlier this week. There's a follow-up that's coming within a week, taking a look at the liquid versus trading the liquid markets versus not trading the non-liquid markets. And I think we're going to start pumping these things out on almost a weekly basis, where we've done all these back tests and we just got to write them up. So follow me on Twitter. Every time those things come up, we will let you know.
Good stuff. Yeah, listeners, follow him on Twitter, 2 S's, 2 L's, RHOADS. And if you get to the drunk weatherman in Tampa, you've gone too far. And if you want to hear more Dr. VIX holding court on unusual activity, does it work, does it not, which strategies work, which ones don't, join us on the Pro. We did a deep dive into that on Tuesday. It's all there waiting for you right now. Second you click that join button, it's all there for you, as well as hundreds of other deep dives into fun topics like that. A lot of Vol-related stuff. If you're into Vol, dare I say it, the Vol Views audience might have the most overlap in the Venn diagram with the stuff we talk about in the Pro. So check it out, theoptionsinsider.com/pro. Back again with oddities right now in your ear holes. Back again to end the day after the closing bell with the Hot Options Report. Then we're all back next week to see what the market has in store for us. Will we shut down? Will we not? Who knows? We'll talk about it next Friday on the next Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade, Inc. is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.